and you probably know, you conk sure, you've made your analysis that this is going to be a bull run, but all of a sudden, rather temporarily, it's experiencing a pullback. Hello viewers, Martingale or Martingale, whatever the pronunciation is literally something that I've come out to elaborate more. I've happened to get a lot of questions from you to basically explain and happen to understand, make you understand rather, of how Martingale and grid strategy work in the forex market. So I welcome you back to this channel. If you're new to this channel, like, subscribe and share. You can also go onto other social media platforms of ours: Facebook, Instagram, TikTok, LinkedIn. Just type in FXKampala, you'll find such amazing affirmative information. Martingale and grid strategy in the forex market, usually they move hand in hand, but I will actually try to separate the two strategies. There is Martingale or whatever the pronunciation is, and then also the grid strategy. They usually move in hand. So for those of you that have been trading for quite well, or for those that have mastered trading and explored it to the advanced levels, you definitely know what I'm trying to talk about. So I've come out to simplify this and also probably acknowledge you that probably might have been using the strategy not knowing that it's the Martingale itself. So this is how it works in simple terms. Like a brief history I've told you about, it started right away in the 18th century in France. And of course, this was basically copied somewhere by traders. And of course, they deployed it in their trading. It's a very simple strategy, and here is how it works. So let's look at a scenario whereby you want to buy. And once you buy, let me get a screen, a chart to elaborate this clearly for you to understand. Let me get a chart that has no trade in it. And so let's assume you wanted to buy along here. And let me put it such that at least you have a clear view of what I want you to see. Let's assume you wanted to buy here, okay? And of course, you entered your buy around this particular level. But instead, let's assume you entered with a lot size of 0.1. And of course, the market comes and hits your stop loss. Instead of, it closes your stop loss. When it closes your stop loss, Martingale states or says that the next trade you enter, still you have to put a buy. When you put a buy, the buy that I'm supposed to put below here, after losing this particular trade, Martingale states that the buy that I put here, I have to double the risk. So let's say if I risked here $100, I have to risk here $20. If again I lose this, I double, okay, what I lost in the long run. What does this mean? This means that it's easier and it's good if the market happens to come back again. That is, if you knew the bias of the market and you know the trend of the market, and you probably know, you conk sure, you've made your analysis that this is going to be a bull run, but all of a sudden, rather temporarily, it's experiencing a pullback. Meaning that by the time this market, just imagine if I put like 4 orders here, it means that as the market keeps coming back, I would definitely be making profits and generate back my profits, and of course minus losing anything, because the general bias of this market is expected to be bullish. This is what Martingale states, and most of you have actually been trading and you literally don't know what you've been trading. So it's as simple as that. However, it can come with a lot of risk. When you continuously do this, you can literally blow your account. So you have to have good risk management. You must have analyzed the market, and you're definitely sure, or you may not be so sure, but of course you know the bias of this particular trend or this current trend in the market, to avoid you blowing your account. So that is first the Martingale. Then let's come to the grid. Let me get another fresh chart here for you to elaborate this such that you can understand them. Let's look at NZDJPY. Oh gosh, it moves this crazy, okay? It moved this crazy, okay? Wow, So for him, greed starts in the early 2000s and was in the early 2000s and was mainly copied and inherited by, especially it was actually developed in the early 2000s, especially that was the coming or the startup point of the EAs or the robots, and this was mainly the ideal approach to programming the EAs, and it was majorly one of the techniques that was used, okay, or strategies that was deployed for AIs in the early 2000s. This is how it states. The reason as why it's called greed, it's because if the market is here, you have a standard deviation, okay, from the current market price. We can say we can have a deviation of probably 20 pips. So what you do, you come and put here pending orders. It works with actually pending orders. Like say for instance, let me get my horizontal line to elaborate this to you. You can say above this, I will do every after 20 pips, I'll put a buy order. Okay, you can put pending buys. Every after, you can put pending buys. You can put pending buys up somewhere. Then down you can say I'll put pending sell orders. This is actually more of edging in this, guys, which I literally may not recommend for one trade, okay, for one trading. But then I usually create these videos to enlighten you, to tell you, to give you information, tell you their negative effects and their positive effects. So this being good and being, it's good, but it's also bad. So you have to do this when you have done the calculations, when you have done your good risk management, and also having reasonable capital that can literally may not blow your account. This is why I've taken long not coming out to give you these strategies. But again, it is my responsibility to also make you know, make you aware of such principles, of such strategies in the market. So what does greed mean? You see, when you look at it critically, you may realize that we have greeds in the market. What does this mean? That this implies that as the market, if the market is in a downer trend like it was here, and it found us with already sell orders like they were here, like if we had entered it in the beginning here, and this was our starting point, means that if the market is in a trend, it will generate us more money as it keeps within our direction. It keeps entering, whenever it approximates those levels. It helps you now generate more revenue, more income. So in simpler terms, this is how greed strategy works. Montigori, I explained it, and definitely they are the strategies, they are the techniques, those that have actually been always asking me to explain them to you. I believe now you've understood them, and this is how they literally work. In case you have any issues concerning trading, mentorship, I'll put my contacts in this video. Don't hesitate to contact us. We'll always be in position to help. Have a lovely day. Enjoy.